and thanks for watching my market report. I am Mike, and I am a loan officer with a national lender. So, if you guys got questions about interest rates or anything about refinance or purchases, please feel free to stop by and reach out, and I'll be happy to answer any questions you guys might have. This report is regards to mortgage rates. So we talk a little bit about what's driving rates for the day, and sometimes we'll touch a little bit on stocks as they do kind of correlate with one another. So without further ado, let's jump ahead and look at the economic report for today. We got only one item here, and that is the New York Fed manufacturing data. This is manufacturing out of the New York region for the month of March. So in February, we had a 12.1, forecast calling for 14.5, and it jumped all up to 17.4. So this is actually a very good number. Anything above zero is considered expanding territory, and we've been kind of seeing this heat up quite a bit as we go. We've had approximately 9 months in positive territory on for manufacturing, so which is a very good news here. So let's jump ahead, see what's going on with the headline news. Sorry about that. Headline news, stocks are down so far this morning. We took our cue from last week. We got the stimulus signed last week. Yields have been spiking. That's been the topic of the day, or topic for the past couple weeks, the spike in yields. Last week, as we'll see coming up soon, it topped 1.6, and right now, this week we do on the agenda, we do got the Fed meeting. So we'll have the FOMC starting their two-day meeting tomorrow, and then they'll give their announcement on Wednesday. All ears will be listening for any changes on there, and of course him addressing the spike in yields. That would be the big thing, see if he addresses that. So speaking of such, let's go ahead and take a look, see what's going on with mortgage rates today. Mortgage are improving a little bit. Yesterday, Friday, we had a bit of a downer. It closed down 42 basis points. Today is kind of making somewhat up, but not enough. Up 13 basis points. As you can see, repayment started a little bit lower than what we left off on Friday. However, we have worked our way up, and now we're up again about 13 basis points. We got this big gap here, which is part of the reason why it dropped much further. But right now, again, up 13 basis points. So we should see a little bit of improvement in our pricing from Friday. Not a lot, because it was a pretty big jump or pretty big slide on Friday, but we should see some slight improvement in that with our rate sheets today. Yields down to about 1.6 right now. We're just, this line here is up about 1.63. Now we're down to 1.60, and hopefully that continues. We want less pressure on there. We can see this going upwards a little bit, but hopefully we can get a little bit more relief from the yields a little bit here. So it'll be interesting. So we could see, one way or the other. And again, this is what's going on with depending on what the Fed says this week. So the Fed, again, will have some power this week with what they say. All right, so that's pretty much the wrap for the day. If again, mortgage rates are slightly better than what we saw on Friday's close, as we did have a pretty big slide. We didn't gain back all what we lost on Friday. However, we're chipping away a little bit at that. You guys have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.